Okay, well, thanks everyone for joining us today in this webinar called Trading Skill, the Key to Long-Term Success. So to give you background as to what we'll be covering today, it's important that I explain what Winix is, because I'm one of the founders of Winix, which is a peer-to-peer asset manager regulated by the FCA. What we do is we pair skilled traders with savvy investors in what we call a mutual profit exchange. And then as part of that peer-to-peer asset exchange, we have developed algorithms to diagnose trading strategies for any trader that is either MT4 or C trader. If you have any more interest as to how that really works, you can check out the link on YouTube that I'm attaching here. More importantly, as part of that calibration, we have checked thousands of trading strategies and diagnosed them on several key trading skills, such as experience, risk management, discipline, performance, and timing. And today's webinar is really about sharing some of the insights that we have derived from the calibration of our algorithms. So I'll be very happy to take questions as we go along. So feel free to type those into WebEx. And also, if you want, we can have a Q&A section at the end of the webinar. I understand the languages that I've put in there. So if English is a barrier to you, feel free to ask in whatever language that suits you, and I'll do my best to answer. And if that should not be enough, I'll be very happy to take more detailed questions offline. Okay? So let's get going. Now, one thing we have seen, and this is the single biggest lesson in the range of trading strategies we have checked, is that people who follow what I call the shortcut actually fail miserably when they trade. So people who believe in the things like 1 to 1,000 leverage to multiply your capital quick, or those that follow signals where people say things like, close trade for 100 pips today, 9,000 pips this month, 100% return, or follow my 95% win ratio strategy, buy my 300% guaranteed per annum execution advisor. Well, I hope you guys have been long enough in trading to realize that this is fake and that people don't really achieve those sort of returns. And I think it's always healthy to question the motivations of those that advertise the above, because very likely what they want is to scam you, okay? So I'm saying this because it's obvious, but also as we've checked the algorithms, a lot of people say that 95% of Forex traders lose money. And I don't know if it's 95 or it's another number, but it is true that there are a lot of people gambling out there, and that gambling leads to long-term losses. So I just have to say that. Now, the good news on this is that there is a magic setup for some people that allows them to live off their trading. That is good news. So it is possible to live off your trading. Luckily, we live in an era where the internet provides more and more opportunities for skilled traders. So I think it pays now more than ever to invest in your trading skill. And obviously, you can make a very nice living by getting paid for trading if that's what you like. So that is, very good news. Obviously, that very good news only accrues to those who do their homework, and today is about that. So to summarize, winning as a trader is part art and part science. To develop your art, in addition to commitment, really what we've seen, it takes time in the market. No single trader starts out winning, period. Everyone loses in the beginning. Now, the good news is that the skill or science in trading can buy you more time for your money in the market. And the more time you spend in the market, the bigger your chances are of developing your own trading strategy that will make you win long term. And this is very, very, very important. No one will give you a winning strategy. You have to develop it for yourself. And just ask yourself, if you did have a winning strategy, why would you want to share it? That's really the question that you need to go through. The other point is that often people underestimate the power of making continued sustained returns over a long enough horizon. And they think that is less powerful than a 1,000 to 1 leverage trade, whereas that is the contrary. So let's go into that in a second. What I'm showing you here is the track record of the best trader in Darwin right now, who has achieved more than 30% per year in the last 2 to 3 years. This is just a part of his strategies, which proves that it is possible to achieve those kinds of returns. More importantly, though, we have seen a lot of people who make something like 100% per year or 200% per year or even more. So that is possible, maybe in 1 year. But what we have also seen is that those people are really crash and burn strategies that achieve 100% 1 year, but then blow up the next, which obviously is not a long-term sustainable strategy to live off your trading. So if you know anyone who can make more than this with degrees of risk, which don't mean gambling, please do let us know, because we will be very pleased to find him. We will pay him a lot of money if he achieves that long term. So just on the question of why the 30% returns on a sustainable basis is a very powerful leverage. Well, that is very, very powerful, because if you go to any high street bank, investors are receiving at most 4, 5, 6% returns on without risk. And that's in countries where the interest rates are high. And the moment you buy into equities, well, yes, it is true that you can make 10, 20, 30% on some years, but then on the bad years, you're also going to lose a lot of money. So someone who achieves a 30% return per annum and does so without correlation to the market, investors will die and bend backwards to give them their capital. And that's when you get into the big lever here, where you get to manage investor leverage, which is the healthy leverage, and can make a living comfortably off your trading. On that note, and that is another key takeaway here, is that if you're thinking of living off trading by starting out with very little capital, something like below hundreds of thousands of euros or less, then actually we think that it's much, much easier to manage those 1,000 to 10,000 euros in a way that's aiming at a 30% return. Because obviously in that situation, that's when you're interesting for investors. You can start managing 500,000, 1 million, 2 million, 5 million of investors' money. And then the market rates for that is to pay you 20% success fee on any upside you generate. And that is going to get you much, much, much more quickly to a life lived through trading than gambling for 100% returns on 1,000K. Because that can work for a couple of years, but then eventually everyone we've seen ends up burning. So much for the intro. Now let's go for the main results of our study on trading skills. So when at Darwinia, we have developed these algorithms to check for these investable attributes, these 6 investable attributes that are displayed. So one of them, I go through them one at a time, is experience. So we check for a statistical filter allowing us to know if a strategy has been in the market for long enough to enable some conclusions. Then we have risk management, where we analyze whether the traders are deploying consistent leverage across trades and managing to a constant level risk throughout time for their strategy. That's one of the things we check. On discipline, we check to rule out loss aversion by the different traders. I'll get to that in a second. We check for the existence of stop losses and take profits. And then there's 3 more attributes, which we're not going to go into today, because the subject of today's webinar is to say that risk management, the second investable attribute, and discipline are the 2 investable attributes that correlate the most with long-term performance. So what this is telling us is that traders who manage the risk management and who display discipline last longer. And we also see that traders that last longer eventually develop winning strategies. And that's why the title of this webinar is Risk Management and Discipline are the key to long-term success. So I'm going to show you now some examples of how what we consider risk management that yields long-term results. And here we see plotted the trades by one of the best traders in Darwinia, just as one example, who is very good at leveraging his trades with consistent risk. To go through the chart in a second, what we've got here, each of these dots is a trade that the trader took. On the horizontal axis, we have the duration of that trade. So in this example, most of these are between 1 hour and 8 hours because that's his trading style. And then on the vertical axis, we have what we call deleverage, which you can think of as multiples of euro-dollar risk. So a deleverage of 1 is an unlevered trade in the euro-dollar. A deleverage of 5 is a 5-to-1 leverage trade in the euro-dollar, and so on and so forth. And then if the trader is engaging in different assets than the euro-dollar, then we translate that leverage into the multiples of the euro-dollar. And the key point here is that you see that good traders try to take all the trades with the same leverage. As you see, these dots are all close to a line, which is, so to say, the target leverage line for those traders. As a result, we see that the risk for those strategies, which is the amount that they could lose in the worst monthly quantity, does not really change over time. So you see that this trader is following a pattern which more or less is constant with the time and does not really move from this level between 5 to 8% of his balance at any point in time. This is what we call stable risk over time. And this is very important because if you always trade with the same risk and you are winning, then you know that you're winning because your strategy is working. If you're changing your risk all the time, then it could be that you're winning because you've just been lucky to take more risk on a couple of winners and take less risk on a couple of losers, even though this would make you think that you're actually winning, whereas in reality, it might be that your strategy has stopped working. And this is very important for you to not delude yourself, and obviously very important as well for the investors to think, okay, well, my trader has the risk management under control, therefore I trust him over the long term. To give you an example, I've taken two samples of traders who do not do so well on this risk management. So let's take the top for a trader who obviously has big changes in his monthly risk. So it could be that he's trading with pretty much no risk whatsoever. Then he very drastically goes up to a huge amount and then falls again. This is basically a situation where you have to ask that trader, so what is your risk appetite really? How much are you willing to risk when you go into these trades? Obviously, when you see these fluctuations in risk, then as I mentioned, there is no guarantee that the strategy is even working, because as I mentioned, it could be that the positive returns are an illusion, which is driven by few winners that happen to go well. But there's always the question, what if those winners had actually gone wrong? Maybe, all the money would have been lost. So as a corollary, the important thing to take away here is that all traders can lose sometimes. There's no strategy guaranteed to win. But the difference between good traders and bad traders is that the good ones, they know how much they lose when they lose. And the bad ones, all they do is lose everything, which is a whole lot worse than that. On another example, we can see the scatter plot of the leverage decisions taken by some different traders. A trader who's actually quite bad in his leverage consistency. And here you see that sometimes he'll take trades with leverage of 6, sometimes he'll take trades with leverage of 0.14, and that is a big fluctuation because obviously you don't really know what drives these changes, and that doesn't give confidence in the risk management of that trader, especially because it could be that a highly leveraged winner had gone right, but it could have gone wrong as well, and in that situation, it would be in big trouble. Okay, so that was so much on the risk management. So we've discussed that good traders trade with stable risk, and they try to enter all trade with similar leverage to make sure that the risk is under control. And traders who do not do that could be in a situation where maybe they make a big win and a big winner, but they could also make a big loss and a big loser, and that's precisely what makes them a bad trader. Which brings us to the next subject that we've also seen, and this is a classic. We call this discipline. And what we analyze here is each of these vertical bars is a trade taken by a particular trader. So a green bar, for instance, here, that goes up to give or take 1.5%, is a trade that opened at 0, obviously, went up to win 1.5% of the balance, And then eventually you see these small dots, black dots here, that was closed at 1.5%. Now, similarly, there are trades that go into negative. And what you have there is a negative excursion where the trade was negative up to 5% in this particular case. And then the small dot is saying that it was closed at 5%. And very importantly, what we're trying to look for here is a symmetry between the size of the green bars and the size of the red bars. And we don't see that symmetry here because, well, let's have a look. The best trade got to make almost 2%, but the trader allowed several trades to exceed the 4%, the 4.8% threshold. So these two trades, one of them actually even got to lose 5%. And that's basically an example for traders who do not have the discipline to enforce the stop losses with the same level as they do the take profits. In other words, this trader could conceivably cut winners short and let losers run, which is a very, very bad indication because that basically highlights that under pressure, such traders will just let the losers run, hoping that they will go right. And then sometimes they do go right, but sometimes they lose everything. And that's the last thing you want, because obviously once you've lost everything, your track record is ruined. Which is another way of saying that loss-averse traders are prone to capital wipeout. On a similar note, what we're plotting here is each of these dots is a trade, and what we've plotted is the duration of the trade, say in this case 8 hours, against the absolute pip level profit that trade actually closed with, that you can see here. So basically trades on the right are winners and trades on the left are losers. So what do disciplined traders typically do? Well, they have stop losses that they enforce, they have take profits that they enforce, and also very importantly, trades that are going neither here nor there. So basically, after 8 hours, the trade has not hit either the stop loss or the take profit. Then they have the discipline to admit to themselves that the setup that they were hoping for didn't actually materialize, and that it's a better use of their time and their money to close that trade and wait for another opportunity. So in other words, you see for good traders, you see concentrations of dots that hit like a very or hit a vertical wall on the right, they do not exceed a maximum trades for a maximum of 8 hours at a time. And if they're 8 hours, then they're not going to go, that trader chooses to close them. As an example of what other traders do, which is, apparently the sound is breaking, so, sorry. So I'll try to speak more slowly and see if things go better now. So in this chart, we have an example of a trader that is a lot less disciplined than the one before. And you can see that is essentially the trades are all over the place. So you don't really see an evidence of stop losses. You don't see an evidence of clear take profits. And also the duration of the trades is all over the place. So it's very hard to gain confidence that this trader will have the discipline to follow a strategy through to the end. It could be that it's just a random trader and doesn't really go very far. So the conclusion out of our study of these over 1,000 trading track records is obviously that trading is part art, part science. We've seen that the traders who develop the science and skill over time do better in the long term. So these are people who are more committed to making it to the succeeding, and as part of that, they do develop risk management and discipline that buys them time in the market to get to a point where they develop a successful strategy. And very importantly, we're not saying here that skill will make you win. So unfortunately, having good risk management and having discipline will not give you profits, but it will make your money last longer because it will partially save you losses. And that time, together with your talent and your commitment, is what you need to develop a winning long-term strategy. And actually, that is a good takeaway from this, is that the people who stay in the game for long enough and do the effort to acquire the skills do end up succeeding. And that's, that is hope, because obviously it proves that if you really love this and you want to be in this for the long term, that's precisely the efforts you should be making. So if you're curious about how you stack up in any of these metrics, we have put them out there in the web, and we offer you the diagnostics and benchmarks for you to self-diagnose your track record, 100% for free for traders who are on MT4 and C Trader. And if you're curious to know how big your experience is, how well you stack up in this kind of discipline or timing, then feel free to visit the site and sign up, and we will do that for you. And I would also be delighted to explain to you one by one how your diagnostic is made up. So feel free to do that. And last but not least, this is the important thing. If you manage to prove the skills that we have listed out in Winix, and in addition you make money, you will have achieved something very, very powerful, which could allow you potentially to apply for a job for Goldman Sachs, which could get you paid by us for trading on behalf of investors. Because if you do succeed in making money and at the same time prove all these skills, then no one can question that you've made money, because you have a genuinely winning strategy and you have nothing to owe for luck. So I can only encourage you to make the effort. It will take you some time in the beginning, but once you have internalized that skill, you'll realize that you'll last in the game much longer, and that's ultimately what gives you the edge. So that was essentially what we had in store for today's webinar. I am guessing that people have questions. So if you have any kind of special request that you would like me to go through, I would be very, very glad to go through your questions. Okay, so the question of where we are located. We are we work out of London, so we are an FCA regulated asset manager that also offers brokers a very good execution, traders very good execution. More questions? So are we looking for prop traders? Very much so. So we are looking for the best retail talent out there, because that's our goal. So Winix is we call it the evolutionary exchange. We believe that there are a lot of good independent traders out there, and we think that investors could benefit from them. So we are much looking for prop traders. Yes, that's the answer. If you want to get in touch, reach out to me, and we will be very happy to discuss that. Okay, so the question on the name of Winix, that's a very good question. So, well, we think that there's evolution taking place right now in the market, and that's because 20 years ago, only banks and employees could trade the Forex market. Thanks to the internet, anyone can trade now from home, and we believe that has led to a huge explosion of talent, which is really evolution, that we are now betting on. So we think that independent traders will beat Goldman Sachs long term, and we have built all these algorithms to prove it. So that's why the Darwin thing comes on, from the evolution bit. And the Winix is the profit exchange where traders and investors benefit by sharing their talent. So a question on Manu Chopra, are we a broker? Can you trade FX through us? Yes, very much so. We are a broker. We offer very, very competitive spread. So you could be trading the euro dollar with a spread of between 0.1 and 0.2 at different points in time. And there are no requotes and very, very, very slow slippage. So we believe in non-dealing desk and offering the best execution. So there's a question on how we analyze the strategies. So I would actually ask you to get in touch with me through my email, which is, I'll put this out there. One of these is Juan@Darwinix. If you have any question which you prefer to share with me like this, feel free to either write directly to me or ping me on Skype. Okay, so can I hook up an MT4 to us from different brokers? Yes, very much so. So any trader with any broker on MT4 can get the free diagnosis from us. Yes, so you will get the free diagnosis. You can. That is the answer. Is this a presentation on our website? Well, no, it wasn't really meant to be a presentation on our website. This was really about explaining the main findings of the algorithms that we have developed to diagnose traders. But well, obviously, it seems as though you have some questions about us, so I'm ready to take those. And then Andy leaves, so we do have an evaluating platform in order to seek traders who use art and science and sensibly, consistently, and profitably trade. Yeah, that is very much the case. So we believe that there was a big gap in the market. A lot of sites where you have people who are gambling to make 1,000% per year, but there's nothing in terms of skill involved there. That's why we developed what we think is a more reasonable way of comparing risk and return for traders. So that is very much what Darwinix is about, yes. Yes, so if a trader uses us as their broker and trade very well, do you introduce investors to them? Yes, so that's exactly what this is about. So yes, we do introduce investors to them. In fact, we don't only introduce investors to them, we do give traders the regulatory cover to manage investor capital. So the way it works is you come and trade through our broker, and because we are an FCA regulated asset manager, we both find the investors, and also we give you the legal cover so that you can make money from the investors without having to be regulated yourself. And that is something that our customers value quite a bit. So our URL on the chat box is here, darwinix.com. We used to be called tradeslide.com before we were a broker, so you can check that out too. But our new name is Darwinix precisely because of the evolution story. And if you want to understand why we call it Darwinix, we can, let me show you a link that explains it quite nicely. Hope you like it. Any more questions that you guys have? Okay, well, thank you all for turning up. It has been a great pleasure over here. As I mentioned, if you have any kind of questions on the details of both the analysis and what we do, I would be delighted to explain to you how these things work. And we now run a program where we explain to everyone the diagnosis on an individual basis. So, you know, feel free to sign up to Darwinix. You will get the analysis for free, and just email me and we can arrange a time where I explain how this works. The length of the track record, Manuel, I think it's best that you write me an email. If you let me know your email, we can take this chat offline, because I think I can explain these things in more detail for you if you want. Does that make sense? Okay. Well, thank you guys. It's always a pleasure to liaise with people like you. If you have any topics that you would want me to cover in future webinars, it would be very nice to know from you what sort of areas you think we could cover, and I would be delighted to arrange another webinar to help out on that. Okay? Okay. Well, it sounds like we covered the agenda pretty quickly today, and as I said, very grateful to have you guys join us today, and wish you very happy trading. Take care.